Welcome back to Commodity Champions, and we'll talk about the crude oil prices now. And all this one is to you. In last 3 odd months, we've seen $40 to $50 per barrel of a jump up in case of crude prices. Russia-Ukraine has been one part of it, but self-sanctions from shipping companies, traders, oil companies have led to supply disruptions there. Iran nuclear deal is getting derailed yet again, and the oil supply loss from Libya has been yet another factor. When you look at these prices, and we almost did $140 per barrel as well, where are we headed on this one?
Well, I think actually, to be honest, crude oil is probably one of the few commodities we've discussed which actually probably does have the capacity to have a supply response as a result of these prices. It wasn't very long ago that we had negative prices in WTI, and OPEC were furiously aggressively cutting production. So there's definitely scope, I think, for OPEC to increase production. I think there is also scope for production growth in the US as well, from sort of previously mothballed production sites. And it's much easier for crude to be moved around the world. Whereas with, say, gas, I think there's a very, very serious problem there. There's really no real way of getting gas into Europe to replace any lost Russian supply, because even with LNG, that requires very, very specific infrastructure that cannot simply be spun up at a moment's notice. So gas is a more serious problem. I think the petroleum complex, in my view, is probably the most vulnerable to correcting as a result of supply response, simply because that's actually possible. And in some of these other commodities, it's not possible.
Well, we are hearing levels of $185, $200 a barrel. The Russian minister talked about $300 a barrel. We've seen the gas prices at all-time highs. Ditto with gasoline, heating oil. Coal is trading at an all-time highs. Where do you see the global energy picture?
Well, I'm seeing a global picture where demand is slowly being forced to be reduced. We're seeing that already in Europe, as I mentioned, on the gas price. But I think petrol prices at current levels are also making you, as a consumer, rethink about your consumption habits. But as was also mentioned, gas is an issue right now. Oil. There are some potential opening of avenues for additional supplies coming, but we'll have to obviously watch the Iranian situation. That could bring oil back within a matter of weeks. Increased production in the US could be within a matter of quarters, but obviously Venezuela could potentially be years before we really see a meaningful pickup in supplies from that front. So the oil market will remain tight until the point where we get a slowdown in the demand growth that we've seen since the pandemic.
So where are you putting the crude oil price forecast to?
I think in this market, there's no point in trying to forecast anything, especially not oil. As Guy also mentioned, this is a market where if we should see a solution tomorrow, we should be straight back below $100. So in the meantime, it will go to the level where if we don't see any solution anytime soon, we'll go to levels basically where demand is getting negatively impacted. I think, as I've mentioned, it has started, but it will accelerate if we should move above 150.
Okay. Talk about gold and silver prices then. And gold perhaps was the first one to hit an all-time highs even before the rally in other commodities began. But since then, we saw a huge amount of profit taking, but the rebound has been strong as well. Guy, would you say that the kind of rebound that we have seen in gold now is sustainable, because there are way too many factors now to be into this safe haven commodity?
Yeah, I mean, obviously the safe haven demand for gold, it's hard to see that vanishing overnight, given what's going on in the Ukraine, to be honest. So, I think it's definitely got a tailwind behind it, and it's a very different tailwind to what's driving many of the other commodities, for sure. But I can't see why there would be a reduction in geopolitical concern in any kind of near time frame. It looks like Russia is very much ensnared in what's going to be a fairly long-running situation in Ukraine, certainly not the quick process they may have hoped for.
And it's not just all of these commodities. I mean, the less spoken commodities, something like a lithium or a cobalt or uranium, Palladium have seen a huge amount of run up as well. Ol, how are you reading these prices? And I get your point when you say that it is difficult to talk about levels and prices because it's a changing environment. How you start in Asia and how Europe goes through and what US opens with are three different markets in the same day. But how would you look at these minor commodities?
Well, palladium is one of the commodities, like some of the others, where it's such a small part of the total cost of what they go towards. In this case, it's the automobile industry, and that basically means it's not as price responsive as some of the other commodities. So palladium is in a situation that if there is really a tightness out there, then car manufacturers will almost buy palladium at any cost in order to ensure the production line doesn't come to standstill. So that is also I think some of the reason why we've seen this rapid move higher in palladium. But I don't know if I may just want to roll back and just give my comment on gold as well, because we mentioned geopolitical risk, but I think at this moment in time where growth is slowing, we got US inflation potentially heading towards 10%. We got increased stock market volatility. I see gold in this moment as a low volatile safe haven, because a lot of the other commodities are talked about as safe havens, but they are incredibly volatile. So from a trading perspective, that's nearly impossible, or investment perspective. But gold, I call that a low volatile safe haven, and we see a new record high there soon.
I actually want to now get final comments from both of you. And Guy, you go first on how we started this year and how we started the narrative in last couple of years. It was all about renewables, EVs, solar panels, and underinvestments in commodities like coal and fossil fuels and crude, etc. But all the ingredients, all the raw materials for EVs as well have run up and shot up so much. In this year now, when you talk about climate change and when you talk about the raw material prices, and I'm not even getting at food prices because we've seen wheat shoot through up by nearly 40% in last 1 week itself, and that has been the case for many agri commodities. What is the narrative now for this year? What way are we headed?
Yeah, I think it's not just underinvestment in new supply, it's also underinvestment probably in the technologies we're talking about. There's really very limited amounts of capital that are actually looking to finance new technologies. Probably the largest is probably Vertri, the Hartree spin out, which I think has got $2 to $3 billion. But in the context of overall private equity globally, that's not a lot of money targeting what is seen to be a sort of structural global problem. I think the risk from the climate situation is that whilst some countries, in particular sort of Europe and so on, will continue to have fossil fuel bans and not investing in coal, then not every country, and China has obviously recently been investing in onshore coal assets, that you'll end up with this dichotomy where you'll end up essentially with sort of very split policies on these things, and obviously that doesn't work when we're talking about the global climate. So yeah, I still think the whole kind of decarbonisation story remains a massive theme. It is one of the reasons why commodity markets were already tight prior to events of the last week or so, but I still think that ultimately provides an underlying positive dynamic. However, we will clearly see a lot of volatility over the next couple of weeks as things settle down.
I'm sure traders do like volatility, but not this kind, and the investors absolutely can't digest this. But Ol, a final question to you as well. So how would you want to make an investor portfolio right now? We've seen the tangible commodities do well. We've seen gold do well. We've seen the US dollar being the safe haven, the choice of currency too. But if somebody was to start putting in money now with this kind of a market, what all should you have in your portfolio?
Gold, defense, cybersecurity, new technologies towards energy, new energy sources. That would really be where that is where I'm placed, and that has been very beneficial so far this year.
And Guy, if I could come to you as well, quickly, if you could tell me the same way as Ol has listed it out.
Yeah, I think the key is not so much what you're buying, but when you're buying it. Nickel 3 days ago, $25,000 a ton, I thought was very cheap. Yeah, it touched $100,000 a ton today. So you need to look very carefully at when you're buying and at what price. But I still think, yes, the underlying demand-supply dynamic, particularly for base metals, is extremely good. But obviously, don't buy after two of the most unprecedentedly strong price performance days in history.
Clearly that, and I mean, these are crazy times, as you were mentioning, a negative crude oil to the kind of jump up that we've seen in various commodities. The last couple of years have been nothing short of crazy and shocking, but that's the kind of times we live in right now. Thank you so much, Guy and Ol, for decoding it all for us and our viewers. We really appreciate your time. And with that, it's a wrap on this edition of Commodity Champions. Thank you for watching.